Yes, thank you. I'm Jim Ludke from Phoenix, Arizona, and I haven't been to one of your annual meetings for about 10 years now. The last one was down at the Red Lion Inn by the water, and I congratulate you on your popularity.
Thank you.
I wish I'd bought more stock then. But like Charlie, I too have been giving mine away for charitable purposes, so your beneficial effects have reciprocated and rippled throughout the economy. I congratulate you.
No, I congratulate you.
What do you think has changed? Well, one thing is that Ben Graham, commenting on what you just said, I'm a student of Ben Graham, and he said it never ceased to amaze him how widely read he was and least followed. But how have you changed in the last 10 years? I mean, much, if any, or none at all, or...
Well, we'll let Charlie. He's been watching me.
I'd say about 1 stone. Takes one to know one.
Yeah. If we'd wanted to change, we would have changed a long time ago. I mean, I've never believed much in this theory of, you know, if I have X, 2X instead of X, then I'm going to do this or that, and you know, or I'll take this job I don't like now and I'll get one I like later on. Or it doesn't make much sense to me. I mean, there aren't that many years around, so you ought to be doing what you like at the present time. And Charlie and I have always followed that pretty well. Zone 4.
Peter Borma, Chicago. Every year you have your operating company send a check back to Omaha. What percentage do the heads of the operating companies keep as a bonus, and how do you set that figure?
Well, we have different bonus arrangements at different companies. It'd be a big mistake with businesses with as many different economic characteristics or as varying economic characteristics as existing as they do at Berkshire to try and have some formula approach that paid managers in all of these different businesses based on a simple formula of one kind. So we have, I think, 4 businesses where they own a part of it, and we have varying arrangements with the various businesses. Some businesses, capital employed is unimportant. There simply isn't a way to employ a lot of capital. So we do not have a capital charge even at those businesses. We don't believe in going through a lot of machinations if it's going to involve peanuts at the end. So some businesses have a capital charge, some businesses don't have a capital charge. If they use a lot of capital, they're going to have a capital charge is what it amounts to. Some businesses are easy businesses, some businesses are tougher businesses. So we have different thresholds where things kick in based on that. We simply sit down and try and figure out, in the case of each business, what makes sense. And that usually isn't very hard to figure out. I mean, we want something that's fair. The best managers, we aren't going to change their behavior much by the compensation thing. We may a little bit in terms of teaching them how we think about capital employed. But in terms of their enthusiasm for the business and imagination and marketing and all that, basically we usually buy businesses with those people in place. But it would be, it'd be wrong not to treat people fairly, and they would resent it if they weren't treated fairly too, understandably. So we try to have a system that rewards the things that we want to have rewarded and treats them fairly in a way that they understand they're treated fairly. And I don't think we have any 2 businesses that have the same arrangement. I mean, they're different in each case. Incidentally, that applies in their policies too. We don't get into very seldom, I should say, and maybe once or twice, but they have different arrangements in terms of compensating their employees. Some of our businesses have budgets, some of them don't. We don't have any budgets that come up to headquarters. We let 400 hitters swing the way they want to swing, and some of them, you know, have a little different swings than others, but overall they're extremely effective, and they feel, we want them to feel like they own their own business. If somebody that's independently wealthy sold us a business and we started telling them how to swing, they would tell us what we could do with it very quickly, because they don't need that in life. So what we have to do is create a situation or maintain a situation where they are having more fun doing what they're doing than anything else they can do in life. And that's what we're designing it for. And then we have to treat them fairly in respect to that. Charlie?
Nothing to add.